SPACs are very much here to stay.
You can trade anything as a trend follower.
When you think about Bitcoin, I don't think it's a currency. I think it's a commodity.
Today, we're in an everything bubble.
I'm Erik Schatzker, and welcome to Bloomberg's Front Row. Today, I'm talking to Lloyd Blankfein, the former chairman and CEO of Goldman Sachs. For 12 and a half years, Lloyd held one of the most powerful jobs in corporate America. He steered Goldman through the financial crisis and the uncomfortable scrutiny that followed. For decades, it was normal, even expected, for Goldman chiefs to build a second career in government. These days, the road to Washington is a minefield for anyone from Wall Street.
I would have considered public service because, what else is left? I worked at a high level at Goldman Sachs for 37 years. You want to do something different and make a contribution. So it's something that, might have, but I'm not mourning it. I understand why it's not happening now.
Lloyd is keeping busy and doing a lot of trading. He and I talk about his views on Robinhood, Wall Street bets, and crypto, the future of New York City, when CEOs should and shouldn't speak out on ESG, what he wishes he'd done differently at Goldman. Here's my conversation with Lloyd Blankfein. For 12 and a half years, you held what was arguably the most powerful job on Wall Street. What's it like now, being the former CEO of Goldman Sachs?
Bit of a relief. I'm not sure it was the most powerful. I spent a lot of time arguing against that, and I always thought to myself, gee, if I'm so powerful, how come I'm taking so much abuse?
How are you keeping busy?
Well, here we are chatting. Somehow I'm not scheduled. I don't set my clock most mornings, and somehow I get to the end of the day, and I've been busy the whole day. I spend a lot of time reading. I try to learn stuff. Originally I thought, and I wouldn't preclude going back and doing something else more intense certainly than the life I'm leaving now. I originally thought and was advised to take a gap year, and then when I finished my gap year, the country decided to go on its own gap year, 1 year plus gap year. So those consecutive gap years leave me in this place. And I'd say the longer you're not setting your clock in the morning, the less you want to set the clock in the morning. But after 40 years of running around the world and living in the macro markets and knowing the price of everything all the time and knowing that anything that could go wrong anywhere in the world would affect us and have a huge consequence for us, it's a little bit hard to drop it. And there are parts of it that I never thought I'd miss, but I do miss.
What are those things? What do you miss?
Well, I miss even sometimes, even as I say, I feel a little bit of relief in not having someone being intense, but I miss that. I miss the background noise, even of having things to fret about all the time.
Is there such a thing as a substitute for that?
Well, I'm sure there's a lot of people who work at great organizations and have quite fulfilled lives and give their all, and they're not at Goldman Sachs. So there's a lot of other things that one could do. If you're asking me, have I found a passion away from the commercial? I'm a commercial person, and so I'm involved in some philanthropy stuff, and I've elevated my involvement in some things in this period. And I enjoy that, and you could be quite commercial in those places too. You can be a commercial person in government in the sense of getting things done and taking risk and pushing things along, and you could be that way in a philanthropy. But I'm a P&L guy, and I kind of like that stuff, and I like the immediacy of it, and I like the intensity of it.
Your four predecessors as chairman of the firm, Hank Paulson, John Corzine, Steve Friedman, Bob Rubin, all went on to serve in government.
Don't leave out John Whitehead.
Well, there was one in between, right? John Weinberg.
It was the same time as, yes.
Why not you?
Well, I would say among the many reasons, I haven't been asked. So that would have to stay. That would be one of the prominent reasons. It's a little bit of a charged environment. I wouldn't say when you look at the administration, you're finding a lot of people from finance and business backgrounds, even in traditional roles in which, that were occupied by financial people or commercial people or business people. So I would say that it's not something that I mourn, but certainly I would have gone into, I would have considered public service because, what else is left? I worked at a high level at Goldman Sachs for 37 years. You want to do something different and make a contribution. So something that, might have, but I'm not mourning it. I understand why it's not, why it's not happening now.
I hear Janet Yellen is looking for an exit. What about Lloyd Blankfein for Treasury Secretary? Would you throw your hat into the ring if you thought they were interested?
Who offered that job would decline that. I mean, that's you'd have to be preparing for your end of life or jumping off a cliff or something like that. Of course, that would be to make that kind of a contribution or to be at that fulcrum of that very large lever. Of course, you'd want to do it. But again, I have no real connection to that. I mean, we can go through this, but I don't think that that's going to happen. But it's not going to happen because I'm going to turn down the Crown 3 times and make them twist my arm. I don't think the offer is forthcoming.
You dabbled for a hot second with consulting. Tell me about that.
I was I think I was trusted by a number of people who came to me for advice, and guess what? They still did. And for a while, and the line between you do things as long as I did, and engage with with the people that I engage with, there's not much separation between your business life and your personal life. And so I found myself in a position of, again, rendering advice, nothing, not necessarily official. And then that started to morph where some things started to take a lot of time, and I toyed with the idea of doing it on a commercial basis.
For money.
For money, nothing wrong with that. But again, it wasn't at the stage of life where I really wanted to get on a horse with a sample case and try to build that business.
So you're not going to be a consultant. You're probably not going to be Treasury Secretary.
I think I'm probably not going to be a surgeon at this point or a nuclear scientist.
But you're 67. You swim every day. You're in good health. What's next?
I don't worry about it. I'm not. Look, I'm also a markets guy. I have been. I'm saying that's not how necessarily I lived the last 20 years of my career at Goldman, but it's an occupational hazard that I know the price of everything at times, and so I occupy myself with markets in the background. In the last couple of years, I trade a lot.
Do you?
I do.
In your personal account?
I do. If I do something differently, forget I said this and wipe out the tape. But I didn't really want to look at people and be managing their money and, express regret because, God forbid, you should lose money. But God forbid, a lesser included God forbid, is that you underperformed somebody else who made more money, or be on that kind of track. And I'm saying, do I really need to do that now? And so I do my own stuff for myself. I can, my whole life, I would much rather have lost my money than lose somebody else's money. And so that's just my wiring.
What are you trading?
I trade equities. I've traded some commodities. I've traded currency from time to time.
You have fun?
I have more fun when it's successful and I'm winning.
Well, tell me a little bit about your track record.
Brilliant.
Come on.
Well, in the period when it started, I couldn't do any of this stuff while I was still at Goldman. I left that at the end of 18, so beginning of 19. Everybody who started in the markets at the beginning of 19 is a genius, because the markets have gone one way. Now, that doesn't mean on any given day, you can look back at a curve and say, gee, that was an easy period, but when you're living through it, you don't know what the next day is. In hindsight, of course, everything is easy, but really, looking backwards, there wasn't a lot of stress. And then this goes, and this has been much discussed, that asset prices were being inflated during this period. So anybody who invested in almost anything, you had there are some things that didn't go up, and certainly there are always things that don't go up. But on the whole, asset prices were being, with zero interest rates, make asset prices go up.
What are some of your winningest trades?
Oh, come on. I mean, boring as it is, investing in the new economy. I don't want to say tech, but let's say tech-enabled, the kind of, companies and industries that are tech-enabled.
Innovation?
That embrace it. No, of course it's innovation.
Yeah.
I don't like to say tech because I think tech is, I mean, I think to be a retailer means you have to be as adept as Amazon was and Walmart has become. To just be a retailer, or to be a car manufacturer, you have to be on the cutting edge, or else you'll be a bankrupt car manufacturer. And so everything, and anything successful at this point embeds innovation and technology.
Now, I'm curious to know how you do this. Do you do the old-fashioned way? You pick up the phone, you talk to a financial advisor, perhaps that person is at Goldman Sachs, or do you pull out your smartphone and trade on Robinhood?
No, I don't trade on. I'm loyal to my old firm, so I haven't traded, but I don't disparage it. It's not something I do. I have certain kind of pathways that have been operating for a long time, and I stay on them. Look, again, occupational hazards. I still wake up in the middle of the night and look at prices, even though I may not be involved, because look, for 40 years, my first job at Goldman was trading precious metals and currencies. And so guess what? 24 hours on the screens. And so those are habits that are hard, that don't die easily. And I'm not sure I want them to. I think it's kind of fun.
In the middle of the night when you wake up and check prices, what's the first price you check?
I look at equities futures, and I look at currencies, and I look at and things are interesting at different times. Energy prices are interesting. And so I'll look at energy prices. It's not a big deal. It's some people are hobby. Some people bet on football games.
Do you do this every day, or is this sort of a few times a week?
Yeah, I would say every day. Yeah, so many times a day. Again, I grew up with the background noise of markets and risk. I always knew what our positions were, and I always wanted to know whether they were going well or poorly. And I had a role to play. Before I was president and CEO, I was responsible for sales and trading. First, earlier in my career, just the currency and commodities, and later currency and commodities and fixed income, and then after that, currency, commodities, fixed income, and the equities. And so again, it was what I did, and no one could do that for very long if you don't like doing it.
True enough. There's a whole new generation of kids who are just as addicted to markets as you are, and they're on Wall Street bets, and they've got diamond hands on GameStop and AMC and Hertz, and you name the meme stock. Do you think that's healthy?
I think it's a fascinating thing. Part of the business that we're in, giving people advice, managing your own risks, is trying to guess the future. And all you have to go on is a lot of information about the past and maybe some information about the present, which people will fight over.
Lloyd, you made a choice upon leaving Goldman not to get involved in the firm's affairs and not to comment on how your successor, David Solomon, is doing. How come?
Well, I think I don't think that's some radical notion. First of all,
that's not true. Some former CEOs get plenty involved in their companies.
Well, I think that's not the best behavior to do. I mean, obviously, I root for my old firm. I root for my successor. I am an investor. I don't think it's only my choice to take myself out of involvement. I left the firm. I'm not there anymore. I shouldn't be involved. I don't think people would be interested in I don't drive the firm. I don't govern the firm at this point. I have a good relationship with my successor, but I don't think I like the post-presidency of George Bush better than the post-presidency of Donald Trump. I don't think I think you have to recognize that the job is tough. If you're an outsider, you don't see everything. You're weighing trade-offs all the time. I'm not privy to the consequences of it, and I don't think it's productive to second guess that.
Do you find it difficult not to be there? Do you find yourself wanting to pick up the phone and talk about things and having to resist that temptation?
Of course. That's why I have a phone that's connected to the system, and I have a rubber telephone that I bought for my grandchild that's connected to nothing, and that's the one I talk to and give advice to.
You were renowned on Wall Street in your industry for I might call it a laser focus on risk. You put it another way, spending 98% of your time worrying about things with a 2% probability.
Yeah, and I was I was trying not to look, I run the risk, I didn't want to look too crazy, but I really spent 100% of my time worrying. I mean, I did. It's a job where you worry because nobody knows anything. And nobody can guess the future. Really, nobody can guess. Some people may accidentally be right from time to time, but nobody really knows. And there's a lot of, I'd say, a lot of the job and a lot of worrying about risk is contingency planning. Not what do you think will happen, but what could happen. And by the way, given enough time, everything not only can happen, but everything will happen.
So put that hat back on. Maybe you never took it off.
I'd like to take it off, but I don't think it comes off.
What are the remote possibilities you'd be most worried about today?
Nothing that ever happens looks in hindsight like it was remote, because it happened. But today, it probably won't be criminality or North Korea. It probably might be a mistake or a flawed program that sells all your assets for a quarter of the value, and you can't pull it back.
An error in some piece of code.
Something like that. That's something that one has to worry about. Not something that's not inevitable. Some things that are inevitable that I'd be so concerned is how we manage interest rates going back to what I'll call normal, but normal by history. If everybody owns paper that has been issued at 0.5%, 1%, 2%, and interest rates go to 10-year interest rates go to 5%, not an unreasonable place for them to be if you look at over history. What happens to the mark-to-market on everybody's portfolio in the world, any instrument ever issued that's still extant? As a result of low interest rates, people have been taking extra credit risk, maybe sovereign risk, but extra credit risk in order to get higher yields. That will break people's hearts because things are stable, but if the market gets disrupted, it tends to be the weaker credits that separate the stronger credits separate from the weaker. So there's a number of things that can go wrong when money starts to get allocated by assigning a cost to money that's more consistent with history. And that's a long way from where we are now in the market.
Are we or are we about to have an inflation problem?
There's a lot of remedies in the world, painful as they are, for inflation. It's very hard to get rid of deflation. So if you had to err on one side or another, you would err on allowing a certain amount of inflation to take place and not want to get yourself into a kind of deflationary. See Japan for 25 years as a reference.
Seeing this from both sides, it sounds to me like you think the Fed is doing just about the right thing now.
I respect the Fed for standing up to a lot of pressure. And I think, again, deflation is a terrible thing. Inflation you could tolerate. I mean, it's bad, and we can go through all the things and how unevenly inflation affects different segments of the population. But it's easy to deal. Again, inflation, you go out and you buy things now because it's going to get more expensive. When you have deflationary expectations, you say, something, I'll wait for tomorrow. Tomorrow you wake up, you say, I'll wait another day because it's getting cheaper and easier, et cetera. And so that really is then you really are in the economic doldrums.
In the early days of the pandemic, when New York was losing more than 800 lives every day, many people, including some business leaders, said the city was doomed. They were writing it off. How does New York's future look to you now?
Anybody who writes off New York is crazy. I mean, the Roman Empire fell. It took 1,000 years, so I'm not saying anything has to last forever, but I see no reason to conclude that New York is going to surrender its centrality in finance and in terms of a place for people to engage and become acculturated into a number of professions. New York's also not a one industry town. There's publishing and there's obviously finance and law and accounting,
media, fine art,
medical center, fine arts. The city has to operate, and so it has to be done in a way and fairly, and people have to have housing and not just people who, the wealthiest, and incorporate by reference all the things that everybody is anguishing over, which needs to be sorted out. But I wouldn't necessarily bet against New York, but there's a cycle to things. I spend time away from New York now too. Again, I'm not going into an office. In fact, nobody's going into an office every day, but pretty soon we will be.
Are you in favor of sending employees back to the office?
I'm in favor of leaning on people to get back into the office.
What about vaccine mandates? For or against?
This is public health. It's not people say it's an individual freedom. You don't have the individual freedom to run a stoplight. You don't have the individual freedom to wave a loaded gun, which is like if you have COVID and you're breathing, in other people's faces. You have to stop at traffic lights, and you have to, guess what? If the country goes to war and you get drafted, you don't have the individual freedom to not go to war. There are certain things that we do as a collective, and it seems to me not infecting your neighbor is a public duty and not just an individual option.
Why haven't you moved to Florida with the rest of New York's billionaires?
I spend time in Florida. I've always had a place there, and I spend more there, but I'm not a Florida domiciliary. If I become one day because my lifestyle takes me down there, and I'm spending more time down there, then that'll happen organically. But I'm not manipulating my life to accommodate that. I have no reason to tell you why I'm not doing it. I'd need a reason to do it.
Well, most people do it for tax reasons, or they appear to do it for tax reasons.
Well, I'm not there yet. But if I get there, forget I said that.
What happens to New York City if its tax base, or at least a good part of its tax base, keeps decamping for Palm Beach and Miami?
Look, I said I was optimistic about New York. I think it's real. I think that the official sector have to take that into account and not be so cavalier. I do think that there are a lot of reasons to be in New York, and some of those reasons overcome the extra cost, but not for everybody. And if the costs continue to rise, and it continues to be more difficult, then the decision point and the tipping point will occur at a different place.
CEOs in this country have become more outspoken in the 3 years since you stepped down. Coca-Cola, for example, and Delta condemned the Georgia law on voter access, and Major League Baseball moved the All-Star game, right? From Atlanta to Denver. And what I'd like to know from you is where you think corporate America belongs in these constitutional debates over gun control, abortion, or voting rights.
It's very hard to resist, and if I were CEOing today, I'd work harder to resist it. I think...
Is that to say you think they shouldn't be saying these things and doing these things?
Again, I think a CEO is somewhat the champion of his people. And their ability to do their jobs. So I was very out front on marriage equality and Lgbt issues, because as the champion of the people who worked at Goldman Sachs, I wanted LGBT community in Goldman Sachs to be able to move from New York to another state, bring their partners with them, get medical insurance, which previously had only been available to spouses, and all those things. Or the immigration. We were in a situation where where people couldn't come to this country if it was their only passport, but they had a passport that was Iranian. Well, there are a lot of dual national people who were born there and couldn't come in and work in the United States, or couldn't. So you took positions on that. But voting, I'm not sure voting rights falls into that category, or an intense divisive issue in this country. Abortion rights. Lloyd Blankfein has opinions on those issues. But I'm not sure that I should be on a soapbox on behalf of Goldman Sachs espousing those issues, my view of those issues.
Many of these debates are part of a broader movement. Do you believe in stakeholder capitalism?
Well, I believe that if you're running a company and you run afoul of people who have an interest in your company, you want them on your side. And if you don't have them on your side, that's going to cost your shareholders dearly. I think You want to get on the good side of and stay on the good side of all your stakeholders so you can deliver successful business to your shareholders.
The discussion is getting complicated.
I think it's very hard to stay out of harm's way in this kind of world where someone shoves a microphone in your face and says, here's good and evil. Are you on the side of good or on the side of evil?
It's not always reactive. I would point to Larry Fink, the CEO of BlackRock. He has very publicly defined the responsibility of asset managers as going beyond investment returns and including ESG factors such as climate change, right?
Again, I think you have to have a good relationship with your people who are shareholders. He's one of them. Whether if I were in his position, I wouldn't be pushing my view of these issues as if, again, I think that's sometimes that borders on sanctimony.
You think he's being sanctimonious?
I think I think when you again, I don't know specific. You'd have to say specific things I can't think of. And he's a great guy, and I'm telling you, we all want to be on the right side of the climate issue. It's very important, and it's the future, and you can make this again a good and evil. But how much money should one? But there are different ways of doing it, and sometimes people do are driven to do inexpedient and non-commercial things because you have to check every box in that space. And it doesn't always make sense to me, even though I know we need to do a lot in that direction and get on it. But you end up sometimes in a wacko situation where you're telling everybody that you're not going to invest in fossil fuels, which would be a great thing to do if we already had the alternative to fossil fuels. But given that we don't, we may find ourselves in a situation where the oil price is spiking and spiking and spiking, and there's no investment made because the firms that would be, aren't getting capital and are scared to expend capital in that space.
Lloyd, it's been more than a decade since Rolling Stone infamously described Goldman Sachs as a great vampire squid. And back then, rightly or wrongly, the firm was hated, and it was widely seen as the epitome.
Well, not everybody hated us, given that our market shares were the number one firm across a lot of all the metrics. So we got a lot of bad press.
People saw the firm as the epitome of greed run amok. Again, rightly or wrongly. What I want to know is, what did you learn from that experience?
It was a populist moment. We were caught up on those things. In hindsight, a lot of the behavior looked bad, and a lot of the behavior might have been bad. It was, again, there was bubble elements to it. I'll tell you what I did, learn. So be on the right side of everything is one thing I learned, but that's not possible. If I did take away something as a CEO, up until that point, Goldman Sachs spent a lot of its public relation muscles in keeping our name out of the paper. Prior to that, I very rarely went on television, gave interviews. My predecessors didn't do very much of that. We always, the ethic was put your clients first, let them take it. You don't belong in the forefront. As a result of that, there was always for Goldman, and preceded my tenure, this mystique about Goldman, again, the last private partnership, et cetera, a mystique, the people had done well. Government Sachs, so many people from Goldman Sachs went into the government, as you pointed out earlier. That mystique became a little bit of an eye roll, and we did not do very well in the reputational. And in the vacuum, in Goldman not defining itself, people defined us for us.
You were CEO through the financial crisis and the aftermath. It included grillings in Washington. There was lots of regulation that followed. Are there parallels in that, or with that, in what the tech industry is going through now?
The country naturally and correctly abhors the concentration of power, and especially economic power. And certainly, Congress is elected, and they reflect. They're the outcome of democracy. And if you're viewed as more, if you thumb your nose at that, at the elected representatives or the people in general, or you act in a way which shows you can afford to be aloof from public opinion, the culture of the country doesn't like that, and elected officials, again, appropriately, I'm not saying this as a criticism, don't really like that, and all of a sudden people will take you down a peg, or 2 or 5. Looking through it from a macro point of view, you don't want to let these pods of high concentration of economic power and influence get into place. So I'd always thought that the tech industry was kind of, in some ways, like financial services on steroids in some way, because they're very, very powerful, very concentrated, and they control, to some extent, control may be too strong, but they contribute a lot to the means of discussion and public debate. So if you're talking about the marketplace of ideas, we'll sort things out because everybody will hear everything and everyone can decide. Turns out that's not the case. People don't hear everything, and people are getting isolated in their little bubbles. So I wasn't sure what the approach would be for tech. It could be national security. It could be right to privacy. It could be antitrust.
While you were still running the place, Goldman dipped its toe, let's say, into crypto, clearing Bitcoin futures and exploring custody. Were you supportive or reluctant regarding crypto at the time?
Well, I just took note of the fact that a lot of bright people think it has a bright future. I'm telling you, I have whole foot and 4 toes into the old world, and it's not something that I gravitate to, and I can think of a lot of reasons why it won't work. But I remember when they were auctioning off spectrum for cell phones, and say, well, why would anyone need a cell phone? All you do is you pull up to, you drive in your car, pull up to a phone booth, and dial a phone. Who would carry that clunky thing? And the point is, there are a lot of things in this world that have worked out awfully well.
You sound, for somebody who used to run a bank, pretty constructive about crypto.
I'm open to it. Look, I ran a bank and I ran risk. And you can't be closed. You have to separate fact from opinion. Nobody knows, nobody knows the future. I mean, there's all sorts of things. There's a lot of things that move in directions that I couldn't and wouldn't have anticipated, and no one else would have either. So to just come out and say that a market that's already in excess of $2 trillion, that faces all these regulatory headwinds, that a lot of people really don't like and would enjoy seeing crushed, somehow managed, it doesn't, every day it doesn't look like it's flourishing, but on no day has it recently looked like it's dying.
Do you own any? Do you own any crypto?
No.
I would have to imagine that as the former CEO, you look back on your career and you revisit many of the decisions that you made. Some of them went well, some of them went poorly.
I prefer to think about the good ones, but I find myself drawn to the poor ones.
So I want to ask about this one. Goldman had a chance, when you were the CEO, to buy iShares, the ETF business, and it was ultimately acquired by BlackRock, and it's become a $3 trillion behemoth. How come you weren't bidding more aggressively at the time?
Of the price that was paid, it was almost entirely goodwill. And so to take dollars and turn it into goodwill, what's the value of goodwill in a financial crisis when everybody's worried about your durability and your solvency? So in hindsight, even in hindsight, I don't know what we would have been in a position to do, because the nature of the big balance sheet nature of an investment bank that has to make big commitments and take risk positions and be the other side of what your clients want to do.
So if it wasn't iShares,
but
what's the woulda, coulda, shoulda that you do actually regret not doing?
I think I'm retired. I think
still a big shareholder.
So in my tenure, I think looking back at it, I'm a client of Goldman Sachs' high net worth business. I think it's fabulous and it's a jewel. I think investing and enlarging that business at a faster clip than was accomplished in my tenure would have been a good thing to do. But you're asking me with the benefit of hindsight, I'd get a little confused. Obviously, with the benefit of hindsight, it would have been good to have a big ETF business and that. But again, I'm not sure accomplishing that without changing the nature of the firm and getting more. I'm not sure that would have made us as durable as we were and as successfully to navigate the financial crisis. But in hindsight, that certainly was a good, and I give credit to the people who saw that, better than I saw it.
Should you have gone into retail brokerage?
I think that that's a good business for other people. Again, you have to know a little bit who you are. I mean, you could be everything, and then you're not necessarily anything. And people identify us, and we identify ourselves historically with the wholesale market, with the most successful companies and the biggest. If there's a big deal, I expect Goldman Sachs to be in it. You probably expect Goldman Sachs to be in it. And that was our brand, and that was our reputation, and that's kind of who we were. And I kind of like that.
Jamie Dimon was asked recently why he's still CEO of JP Morgan after almost 16 years. You may have seen the interview. In it, he said, and I thought that this was revealing. I really did. He said that he needs a purpose in life, and his purpose is JP Morgan. Does that answer resonate with you at all?
When things are going well, you don't want to leave, because it's the greatest thing in the world. When things are going badly, you can't leave. And so I always knew I had to have the discipline to leave when I didn't want to leave, i.e. when things were going well, because otherwise you get carried out. And so that was a bit my calculation. I wasn't so much done with life or ran out of gas or anything like that. It was long enough, and it seemed like everything, had gone through a lot of, stuff, and things were, things felt okay to me, and I thought it was a good time to transfer the flag.